All right, testing, 1, 2, 3, testing, 1, 2, 3. The rain in Spain falls mainly on the plains. The ants in France stay mainly in your pants. Good morning, everybody who's alive. Welcome to Non-Farm Payrolls, number 147. Yeah. Up to the sound. Thank you to the world's greatest moderator. Other moderators wake up and say, one day I aspire to be a great moderator like FX Street moderator. So thank you very much to everyone as well for your patience, not freaking out. Sometimes this happens, traveling around the world, relying on all kinds of different technologies from different places. But namaste to you, my friends. Today, we are going to trade non-farm payrolls. Now, I am on my travel laptop. I don't know why the OBS studio doesn't like the microphone, but, well, we are here, so we have found our solution. So anyways, so the charts are not going to be as robust as I normally have. I do have TradeTheNews.com running on my other laptop next to me, so hopefully you'll hear that audio as well. The plan here today is going to be pretty simple. I'll cover the basic scalping technology, or technique, sorry. The non-farm payrolls is going to come out pretty quickly. What do you think it's going to be, $1.80? Something like that. And then we'll talk about what that means. We'll go through some charts. Unfortunately, something came up today. Just so you know, I'm at Harvard University. I spend summers here. I'm in an elite program, and I just found out today, because it's really hard when I get here. I do 2 classes. It's nearly 8 hours a day of lectures, and my first week in just one of the classes was 300 and almost 400 pages of reading. I've written multiple papers, multiple exams, and I've only been here a few days, just over a week. But I just found out that other Harvard students are not allowed to take more than 1 class at a time because it's just insane. It's just too difficult. So luckily, I'm in a program that has actually been deemed too difficult, and I'm doing well. I'm alive. But I got to go to Rhode Island and rub elbows with some billionaires. So I got to do that. So unfortunately, I can't do the full 3 hours today, but I do apologize. So with that being said, good to see you virtually anyways. My name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. TradersWay is a boutique foreign exchange brokerage that allows you to choose an ECN account, a variable spread account, a fixed spread account, whatever you need, it's your way. A Trader's Way with Trader Wayne, and each one of those accounts would be appropriate for different types of trading. So for example, if you were scalping and were worried about wide spreads from the interbanking system, you could do a fixed spread account. If you want lower spreads most of the time, that would be a variable spread. If you don't like spreads, you can choose ECN. So that's cool. So anyways, please visit TradersWay.com and open an account today. Once again, thank you to FX Street for hosting me. It's been 147 months for this particular webinar, but I must have been working now with FX Street for 13 years. Pretty interesting, right? That's a long time, but I can tell you that the very, very first conversation about trade non-farm payrolls live, we were really excited to do something. And I said, look, I don't want to just do another webinar like everyone else, some PowerPoint presentation or something. I want to do something that actually really helps. I want to make a difference. And FX Street also wanted to make a difference. So this idea that, you know, we have the live market in front of us, it's non-farm payrolls where it's the most volatile, you know, we can have a very, very large impact. And in particular, you know, 13 years ago, there was a lot of hype about how to get rich quick trading, not just Forex, but non-farm payrolls in particular, how you can make, you know, $2,000 in 1 minute and go buy your yellow Lamborghini. So the idea of here is I can get with you, you know, live markets, not PowerPoint presentation, while it's volatile, not while it's perfect world, and for 3 hours. These webinars over these 13 years or 12 and something years are 3 hours long, and that gives us an opportunity for me to really roll up my sleeves and answer your questions. So we can start, the news comes out in just a few minutes. We can start with that. We can try to look at the volatility and stuff, but then we can also discuss it as a group. What does it mean fundamentally? What does it mean for central banks? What does it mean for other economies? And also look for opportunities to scalp or get into swing trades off key levels of support and resistance. So we can, you know, this is, I think, quite different, quite unique. So for today, what I suggested was we get the numbers and I'll bumble through a couple of charts. We can look at how the market responds. And then for an hour, I'll just take Q&A. And we can look at either, you know, I think the easiest thing to cover today would be technical analysis and do look at different types of techniques and stuff. And then we'll call it a day, if that's all right. I hope you're enjoying your summer. I've been really enjoying studying Islamic banking and finance. I'm also doing business rhetoric. So right now I'm writing a business plan for a startup. So very, very cool stuff. And I miss you. It's been almost 2 weeks now since I was able to hang out with you. In this case, a month if it's been non-farm payrolls is our only opportunity. So equity markets bullish. Well, you know what I look at, and we only have a couple of minutes here, so we should be careful. But what I look at is macroeconomics. So I don't even look at just, you know, what's happening in the U.S. market. What I most care about is what's happening in the U.S., what's happening in Europe, therefore what is happening in China, therefore what is happening in places like Australia, New Zealand, Canada that offer commodities and so on and so forth, right? So that's kind of what I look at, U.S. and Europe, and how does that affect exporting nations like China and Japan, and if they're booming, what's the demand for commodities like around the world, and all of a sudden you get this full circle, right? So that's kind of what I'm looking for. So, you know, what should we get today? What, 200,000? Not quite 200,000. $1.80, $1.65. Well, right now the trend in headline non-farm payrolls is fine. I mean, we're near full employment, so what's the big deal, right? The biggest deal is if people are falling, are moving from not in the labor force into the labor force. So it's almost like it can be good news if the unemployment rate goes up, because what that means is we're sucking people into the market, but they don't have jobs. That could actually be a good thing. If that is occurring, then wages are not likely to rise. Conversely, if people not in the labor force are not re-entering the labor force because they're not counted in non-farm payrolls, then what might happen is you see wage growth, and that is a key indicator of future inflation, and that gives the Fed, you know, the ability to raise interest rates to infinity if they want, as long as that's moving. So that, you know, if you're an economist, this is really important stuff. If you're looking at things like solo growth models and stuff, population size, education level, savings levels, all these things matter if you're looking at growth. Okay. All right. So anyway, so what do I have in front of me? What currencies is this? Is crude. I'm cruising, I'm bruising, I'm never losing. By the way, I'm so glad we got this working. Yeah, I'm living at the dorms at Harvard. Fantastic, by the way. Just totally enjoy being a student. But I spent a hell of a lot of money to get a really nice hotel room to make sure I had strong internet access and a quiet space, because getting together at 7:30 in the morning is earlier than the libraries are open in the summer. And would have been a bummer to spend all that money and all that time. And everyone would be disappointed. So anyways, I'm super happy it worked out. Thank you again for your patience. Okay, so we're going to look at a 1 minute chart. You're going to let it spike. Then we're going to look for retracements, for scalps. And then after that, we're going to look at key levels of support and resistance for bigger trades, okay?
Earnings expected at 0.3%, 2.8% year-over-year for the U.S. U.S. trade balance for May expected at minus 43.7 billion. Also get.
Can you hear that in the background?
Employment data from Canada.
No, thank you, Forex. You're important to me, and that's why I'm here.
Earlier in the week, we did see the ADP employment change come in about 13,000 lower than expected. I've not heard any hints from President Trump today.
Looking at Euro USD.
US and Canada data due out in just a few seconds. Payrolls expected 195,000, unemployment expected 3.8% for the U.S.
Yeah, is there a Canadian jobs report as well? Sometimes that can be good, sometimes that can be bad when they're coming out together. Technique I'm going to use, I've already published on FX Street 100,000 times. Hopefully you have that.
213,000 for payrolls, above 195,000 expected prior by
213,
223,000 unemployment rising 0.2 to 4.0%.
Canada, a good number, 32.
Rising 0.2 to 62.9%. Hourly earnings at 0.2%, so 1/10 lower than expected month-over-month. 2.7% year-over-year is also 1/10 lower than expected. Trade balance at minus 43.1 billion, a little narrower than the minus 43.7 billion expected prior. Buys slightly narrower as well for U.S. trade balance. Canada trade at minus 2.8 billion versus minus 2.2 billion expectation. Canada unemployment at 6.0% is 0.2 higher than expected, and a 0.2 uptick for Canada. Net change in employment at 31.8 thousand for Canada, above a 20,000 expectation.
Okay, so we got the retracement into the roll reversal. So there is a potential scalp. Stop would just be below there. You shouldn't be risking a lot. If you get caught, it's just because the stupid market lied to you. I'm looking at weekly pivots here. We're quite a ways away from the weekly R1.
Just know as part of the trade balance data, the deficit to China did widen to 33.19 billion from 30.8 billion last month.
The Canadian employment data, the full-time employment change was lower than expected. Big jump in part-time employment, accounting for most of the beat on the net change.
So I'm looking for key
overall
levels.
The reaction in the market somewhat muted. We've seen bond prices actually tick a little higher, yields moving a little bit lower. The 10-year yield down to 2.82%, the 2-10-year spread holding right in the low 28 basis point area. The euro moved out to a fresh high of 117.41.
Okay, we're getting pretty close already.
Gold futures have lifted a little bit, still down on the day. Equity futures have lifted a little bit as well, but still in negative territory.
Okay, in the next 2 minutes, you should either you should probably be able to move your stop loss to break even. Shoot, they delivered my Porsche. It's outside. No, I do not have access to NASDAQ futures on this PC. Sorry about that. Okay. So again, typically your stop loss is out. Move to break even 3 minutes maybe after the news. So this is now. So this is the one. This is the pullback. You got the roll reversal, and it's at least 50%, almost 618. And now we're looking for the extension. First target is going to be the 1750-ish area, so about 10 more pips up. Looks like your entry is about 25. So, it's a whopping 25 pips, but, the other thing you could do, and I usually prefer to do it, just jam my stop, and instead of going for 25, go for 50. Go for 100. Who knows, right? So the first goal is simply get your stop at break even, and then hero or zero. Dude, they're freaking out. Dude, this car, park it. Park the car. All right. Boo, 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 boo. Euro's cleared a $1.19. All right, cool.
In trade news, China Commerce Ministry filing a WTO complaint against the U.S.
Okay, so I'm going to look. Let's switch it up. See what else is going on in the world.
Tariffs going into effect today.
So here's my world famous Mexican peso trade. Anybody take it this month? Ba 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 ba. No? Yeah? Yeah. So if you know me, you'd say, Wayne, somewhere around here, wants to sell the peso. And the good thing about that is you just know there's no way. I've never in, what, the 7 years I've been teaching that, maybe, yeah, 7 years is probably about right, 8 years maybe, that I've been teaching that trade. I've never once said buy, so it's good, right? So yeah, so Brooke got it. A couple people, Ronald got it. Right on, guys. Especially this time of year, because you have to be careful. I always tell myself that this time of year, your technical analysis may not become a self-fulfilling prophecy. Does anyone know why? Why would your technical analysis not be as much of a self-fulfilling prophecy is typical? Yeah, the swap's always going to be good. It's going to be better against something else because obviously the USD is, costs you a lot. Like, for example, if you could do Mexican versus the Mexican peso versus Japanese yen would be a much better swap, right? Yeah, that's right. People are, professional traders in particular are on vacation. That's absolutely correct. Dude, this guy is freaking out. Dude, it's a Porsche. Park it. Thinks his car is his baby or something. It's not a baby. Park the car, leave the keys. All right. Con says technical analysis is lagging. Sure, of course it is. Does that mean you don't use it? So,
Chinese state news agency saying U.S. tariffs on Chinese goods are doomed to fail. So
hang on, I'll turn this
trade
right on.
rhetoric from China.
All right, so going on that thought, technical analysis is lagging, mostly. Now, I do use leading indicators, but it's fundamental analysis that is leading. Technical analysis is lagging. There are some leading indicators, but generally speaking, technical analysis is looking at past, price action and patterns to help predict the future. But you're looking backwards. Okay, fine. But fundamental analysis is definitely leading. And I know what I'm doing in October already. I know exactly what I'm going to be doing in October. And in fact, I know what I'm going to be doing in September. I know what I'm going to be doing the third week of August. I know what I'm going to be doing the third week of December. I know what I'm going to be doing the third week of January and the first week of January, for that matter. So yeah, all of that is leading indicators, and it is on fundamental analysis. But you would still be guessing if all you used was fundamental analysis. You'd be doing things like, I guess, buy it at 119. Put a stop at like 150. there's more to it than buy it at some random price. Technical analysis refines your entry both on price and on time, because that's what it is. It's the price-time continuum. So yes, I know exactly what I want to do the third week of August. I don't know if I'll have an opportunity, and I don't know what the price is.
The euro continuing to inch higher now, above 117.50, up 62 pips.
Okay. Well, you say order flow is the best, but then you're being reactionary, and then I think that is even more lagging in the sense, like you're sitting there and looking for flash orders and stuff, and even then, but so it really depends on what you mean. But look, I've always had the opinion, and the very outspoken opinion about this topic. It goes back to 2004, I think it was the first Forex Trading Expo, and I was a speaker there. The very first Forex Trading Expo in Las Vegas, I was a speaker. And I'd never seen or met another foreign exchange trader. It's pretty funny because I'm self-taught. So anyway, so I go through my presentation, and it ended up being the basis of my book, which I published in 2008. So so anyway, so I do my presentation, I go check out some other presentation, and there was a panel discussion on this, leading indicators versus lagging indicators, fundamental analysis versus technical analysis. And they were arguing. It was kind of like a heated conversation and stuff. No, my way is better. No, my way is better. And then I raised my hand, and I'm in the back. No one knows who I am, and they're like, "Yeah, the gentleman in the back." And I said, "Well, you're speaking to an audience of amateur retail Forex traders. They're trying to learn how to trade conservatively and profitably. Wouldn't you recommend to this audience that they should have a healthy understanding of both technical and fundamental analysis?" And they were just flabbergasted. I had ruined the panel discussion. And then they look at each other and like, "No, technical analysis, no, fundamentals, right?" The price is always right. So anyways, so that's what I'm doing, right? Yeah. Oh, thank you, Con. I appreciate that. So what I'm just saying is that's really, you want to master your domain, right? If you truly are a master, you just have no weaknesses. Well, you have no weaknesses that you're not working on, I guess, or whatever. So ultimately, that's what you want. And you want to fall in love with technical analysis. You want to fall in love with fundamental analysis. You want to fall in love with doing the work and the research, because you should love what you do. What Richard Branson says, the key to his success in all his 400 businesses is fun. That's what he says. That's how he made his billions. That may or may not be completely true, but a key component of how he likes to run his businesses, is fun. Forex should therefore be fun. It should be something that you love to do and make it a lifestyle. This is often what I teach like when I mentor people and stuff, to fall in love with the work and not look for shortcuts, right? I think it would be a huge weakness if you said, "Oh, I just don't get fundamentals. I just don't get them, so I don't use them. Price is always right. The charts never lie." Like, wow. What a gaping hole in knowledge, right? It's kind of like the ostrich sticking his head in the sand. Why don't you spend just 2 or 3 or 4 years and master fundamental analysis? How hard could it be? Go to college, get an education in economics. Now you're an expert, right? That's how I look at it, anyways. So that peso's Oscar Mike. It's on the move. Very nice. Euro yen. You like the yen? Gorgeous, huh? And I will fix you. So can you guys see just looking back, bulls buy at that price. And by the way, on the idea of leading and lagging indicators, I knew that probably 2 or 3 days before it occurred that's where bulls would buy. I didn't know they would buy there. I just knew that that's where bears would buy. I don't know if they're going to do it, but if you were going to buy it, that's where you'd buy it. In the same sort of fashion, like going into this week, on Sunday or even on Friday, I would have been kind of looking at this area originally as an area to buy if you're a bull. But then you could see on Friday, this just, we blew the doors off this thing, right? So in that case, you look left, instead of looking at, let's say, what I call market support. In this case, you look at price support or price action, right? Because we kind of blew through the market support, so now you got to do price support. And you kind of do this, you drag that across, and this whole area then becomes a buy zone, okay? Now, the interesting thing is that's what you would have been thinking on Friday. Now, on Monday, bad place to buy, right? Monday morning, bad place to buy. And then you have to wait till basically London open or New York open, and you're right on the price that you wanted on Friday. You're like, look at that. Holy smokes. Right? And that's the whole zone. And that's all leading, right? That's all leading. That's technical analysis, not being lagging indicator like Con was saying earlier, right? So Con says technical analysis is lagging. That isn't. Right? So I'm not shooting you down. I'm just, sort of food for thought, right? That isn't lagging because I would have been thinking that on Friday. Now, I've probably taught a few hundred people now how to swing trade, and they know that is factual as well. They're like, yeah, that's what Wayne would do. Yes, dollar CAD would be down, Emmett, because of two things. One, non-farm payrolls weakened the US dollar. And two, Canada's job report was much better than expected, and that strengthened the dollar. Okay. Oh, Lover asks what moving averages. Okay, good, great question. Let me zoom in. Beep. Now, by the way, again, this is the 147th month that I've done this webinar. If you're new, type in new. And if you've attended these non-farm payroll webinars in the past, would you type in how many? 5, 50, 100, 125, 130, 140. But telling me really helps me understand the knowledge level of the room, because we should have a common language with each other. Okay, so if you're totally new, I know how to I should explain a little bit more. Okay, so new, 4, 20, 120 minimum, new, 50, not. Forex bit period, more than 9, right? Yeah, I went 4, 10 or 15. Okay. Very interesting. Cool. All right. Yeah, more than 70? Yeah. Amazing, huh? So this summer I turned 18, which is great. So that means I've been doing these webinars since I was 6. 5.5 really, which is really amazing. It's almost unbelievable. All right, so let's go through this then. Okay, let me isolate this. Well, let's start here. The 2155. So I will zoom in. Okay, the orange line and the blue line. These are the ones that I care about most when analyzing. Okay. So you can see, well, there's one here and one here. Okay. Those two lines are important. I'm looking at them together, not individually. Okay. My delete doesn't delete. No. All right. All right. So looking at these things, I say to myself, what direction is the market going? I define market from questions that people used to ask me back when I first started trading. They knew I was a currency trader. They knew I quit my job as a venture capitalist. I was just promoted to vice president of the firm. We had about 300 employees. And I quit to be a Forex trader. So all my friends knew that I was an idiot. So they would say, hey, so how are the markets treating you, right? I'm like, the market? Well, it was up for a while, and then it was down for a while, and then it popped up that it was fake, so then it's dropped, and then it double bottomed, and they're like, whoa, 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 what happened today, right? So I define basically is what's sort of happening today. In this case, it's this particular time frame, but today doesn't mean every minute of the day or the hours throughout the day. It's basically answering what's happening today. By the way, Chris, it's not 144 or 233. Okay, or you could make it 233. That's fine. But anyways, so I defined that early in my career as the 2155. Together, they represent the market. So now, technically, I can answer that question. So how's the market? Oh, the market's bullish. In particular, I used the 15-minute chart back in the day. It was really powerful for me. So I'd say, you know, the market is bullish. Determined by what? Oh, the 21 is above the 55, and it has been since this time frame, right? This time here. So the market is bullish, technically speaking. Okay? Then I can also look at this and say, well, is it really, really, really bullish? Or is it just a little bit bullish? Because we also know there's a difference, right? What I call aggressively bullish or conservatively bullish. And for that, I look at the angle and separation between the 21 and 55 EMAs. So again, the orange line is the 21 EMA. The blue one is the 55 EMA. So 21 above the 55, bullish. 21 below the 55, bearish. But the market is most bullish when it's above the 21, when price now is above the 21, right? So if we're above the 21, I'll say, oh, the 21 is in control. Like this up, move to the 21 up, that shows me the 21 is in control, okay? If it drops below the 21 and kind of stays above the 55, you can kind of see how it looks supportive here. I'm still technically bullish, but I'm very conservative. I'm conservatively bullish, but I'm also assuming things like double tops in this case. We might be approaching a double top. Or if we approach a key level of resistance, I would be concerned about price's ability to break above it, because I'm conservative now, okay? For example, why would this be so bullish and then suddenly kind of just peter out? Well, we're facing non-farm payrolls. So people stop trading. And that's exactly what it's telling me here, that I should pull in the reins of my aggressiveness. And in fact, instead of expecting higher highs and higher highs and higher highs, I should be concerned and not expect higher highs at all. In fact, I should be looking for opportunities to take profit at resistance or look for reversal patterns like double tops to also get out. Oh, I see. Chris using 144. Yeah, that's totally fine. Yeah, I've used 144. It's fine. It doesn't tell me what I want it to, But yeah, I'm sure that would work just tickety-boo. Okay? All right. So with market defined, I can say I'm bullish and I'm aggressive. Then the next thing to define is price. And price, whether price is bullish or bearish, I look at the 5-8 EMA combination. So I got to zoom in a little bit. The 5 is the red line, the 8 is the black line. And these are really my triggers. Okay? These are my triggers. So, for example, if I was bullish and I'm long here, I could try to stay long until I get a 5-8 cross. Down. Down would take me up. Okay? That's one way of using it. Or, you know, after a fresh cross, I can take the next 5-8 cross down. So put it this way. Here's the raison d'etre. When the market is bullish, I would like to buy. When the market is bearish, I would like to sell. Okay? The 2155 helps me define whether it's bullish or bearish, and the 5-8 cross tells me when I should buy and sell. Okay. Now, to make things maybe a little more complicated, sometimes I'll do something like this on the 4-hour. Okay, and you can see back on Friday, the 21 crossed the 55. I could say I'm a bull on all time frames. I could say because of the 2155 cross on the 4-hour, I am now a bull and I'm going to be aggressive. Okay? And then I can drop into a smaller time frame and say, all right, when I spot opportunities to buy, I will buy. And then when those opportunities like the 5-8 crosses down, okay, I take profit. 5-8 crosses up, I buy again. 5-8 crosses down, I take profit. 5-8 cross goes up, I buy. And I'm lining everything up on smaller time frames with my 4-hour. That is one way of doing it, okay? Joe says, let's talk fundamentals. Where's the dollar likely to go the next 3 to 6 months? The next, let's say, 3 months would be predominantly sideways, so it'll be weak and then strong, okay? And then going into the end of the year, I would like to see, so now you're talking about the last 3 months, I would like to see weak US dollar. Okay, it's pretty clear, right? So I think it'll be up and down for 3 months, and then hopefully weak for 3 months. That's what I'm looking for. Okay, okay, but then that's my fundamental bias. That's my hypotheses. Technical analysis is the study that confirms or denies your hypotheses, right? So regardless of my bias here, this is a buy zone. Just using technical analysis, guys, there's no doubt in my mind that that's a buy. And I know there's 100 people that can back me up and say, that is exactly what Wayne taught me to do. And there's nothing if, and, or but about it, except for the fact if you were a bear, you would have sold here. Okay? And you say, well, Wayne, how can you be both? Well, first of all, I didn't say you should be both. But technically speaking, if I was a bear, I would sell this every day of the week. Like Friday or Monday, that is such a hardcore sell. It's like a slap in the face. If you're a bear, you should have sold that. And in fact, you would have made money here. And if you tried the double top, you would have made money here. If you tried here, you would have lost. But that would have been non-farm payroll, so you might have been a little more conservative about that. But that is a sell. That is a sell without a doubt. Without a doubt. But if you're a bull, and I think you know I'm more bullish on this pair than bearish. I think you know that. I think some people certainly will know that. And so me buying here is perfect. Me buying here is perfect. I love me buying here. But that has to fall into your fundamental bias first. Okay? Now the funny thing is I'd rather be long than short, but I'm not confident on the long because it's the wrong time of year. Again, that's more fundamental. Okay, guys, so I have about 15 more minutes. So if you got a burning question or you want me to cover a specific pair, let's get on with it, baby. Let's get going. Do you use risk reward when you trade with EMA bias strategy? I don't even know what that means. Risk reward with the EMAs. Well, let me try to get something through that. Of course, you're going to use risk reward ratios when analyzing the probability and payoff of the risk that you're taking. So it'd be foolish to risk 100 pips to make 10. It would be foolish to over leverage, put down a 10 lot trade to make 10 pips. Another very foolish thing. So like to ignore risk levels, I can't imagine a situation where I would recommend that, right? And then second of all, I don't know what that has to do with moving averages, because all they're telling you is when the market is turning up and then when price is bullish or bearish. So, if the market is up, I actually want to see red candles pulling back and then buy the 5-8 cross up when it turns up and the 2155 is already up. So that's all I'm doing is aligning price action with market forces. That shouldn't have anything to do with risk reward ratio. Now, if your analysis using moving averages tells you it's not likely to go very far up, then yeah, forget about it. Right? Then don't take it. Now, by the way, you guys see, within 30 seconds of non-farm payrolls, did you see me draw the fib study? Did you see me draw the retracement and the extension? Did everybody see that? And look where we stopped. You're welcome. Isn't that beautiful? 3 points, nothing but net. High flying, death defying, 360 slam dunk. Chow. Cool, right? What you take help from how do I? Jai Lover says, what do I use stochastics for? Okay, great question. I like to use the stochastics to represent overbought and oversold conditions for price. Okay, so we're not talking about market now, we're talking about price. So for example, now you wouldn't want to analyze that on a 1 minute chart per se. You kind of want to look at this first, but let's say I have some higher time frame analysis that makes me aggressive and want to buy. I'm not saying I'm in that situation now, but if I did, one of the things I can look for is when price retraces to a particular level I'm interested in buying. Another way of saying that is when price retraces to support and I'm a bull, I want to look to buy at or near that support level when the stochastics is oversold and trying to rise. So basically something like this at support. Okay, so let me kind of force in a situation. I think you can see this was resistance in the recent past. one of the things I tend to do is I drag that old resistance to the right, and I make that future support. So one of the ways I could have traded this, okay, so we did get this pullback, guys. It happened in the first 30 seconds, okay? It came back. One of the things that you could do is kind of set it up like this, if the chart will let me. Okay, so that resistance, right, down to this support, which used to be resistance, right, up to this resistance. So now I'm going to look at the old resistance and act as support. And you could do it this way now. Okay, I'm not saying you should have. I'm just in a different world. Non-farm payrolls is a different world. But let's say in typical scenario, if you're looking at higher highs and higher lows, price action would dictate something like this. Higher high, look left, drag resistance across. It's the new support. And it did. It just happened to do it in this candle. Okay. So then it popped up, right? So up, staggers here for a while, up. So again, you could use this old resistance as future support. Price comes down, you could buy it here, and you'd look at the Stokes and you'd take a shot right around there. Conversely, sometimes what happen, it'll retrace, but the stochastics will not be way oversold and rising, and you would walk away. How did I find this 1618 level? I measured, okay, from the bottom of the pre-spike price level to the top of the first, the spike after the news. So like, I'm really trying to zoom in here, but I can't really do much more than this. So let me delete that. Okay, in the first minute, we had, this was the low pre-news. Then the news came out and it spiked up here within the first 30 seconds and then dropped down here before the 1 minute closed. So you can actually see this, right? So I measured this price to that price, okay? And this extension that I predicted was 162% of this range. So basically it was this range plus 62% of this range put us right at this price. Okay. And to do that, I use Fibonacci, and that gets us right there. 161.8. Okay. So I bought a 50% retracement and took profit at the 161.8% extension. It's Fibonacci 101. What book do I recommend for fundamental analysis? Can't think of one. Mine goes into it. Probably a third of my book has to do with fundamentals. Another third is trader psychology. But I wouldn't call it the most comprehensive book on fundamental analysis ever written. There's a book on economic indicators. It's not really fundamental analysis, but it tells you the difference between CPI and PCE, for example. Oh, okay. Oh, I see. Yeah. Imad says the course. That's true. You could visit fxbootcamp.com and take the fundamental analysis course. I think it's 20 hours or something of fundamentals. Yeah, the book is for beginners, faux show. All right, Joust says, do I weekly pivot points for support and resistance or trend lines? I don't prefer trend lines because I believe they're very subjective. Horizontal lines based on particular prices, like psychological levels, I think are more useful. I like both weekly as well as monthly pivot points. So this one is sent on weekly. But I also love monthly pivot points. Love monthly pivot. Love it. Whoop, whoop. Okay. So you can also see another reason for price to have wimped out is that we hit the monthly M3. By the way, just to be clear, if you're a bear on euro dollar, you should be preparing to sell this. You should be preparing to sell this. This is where a bear would sell. Are they going to sell today? Maybe, but I'm talking like this month. If I was a bear, I would hope and maybe even pray that this 117.50 level is the high for the month of July. Now, again, July is a low volume, low volatility month, so maybe you don't get, your prayers go unanswered. But if I was a bear, I would be very interested in selling around here. So now the next step would be to drop into smaller time frames and use technical analysis to discern if I have a reasonable opportunity to take the risk. Now, typically, like I'll use this 15-minute chart. Typically, like between now and Tuesday, what I would like to see would be, let's say, something like this. As a bear, I would look for a double top and then a drop, and I'd be super aggressive as a bear selling. Okay, and ideally on the double top, not just the touch. Okay, and that's what monthlies tell me. Okay, right? It doesn't tell me to sell. It says if I'm a bear, I should look to sell around that price. So now I need a reversal pattern. And I think that makes sense, right? Wayne, weekly and monthlies, what do I use? Yeah, basically S1 and 2, R1 and 2, and all the midpoints. M3, M1, M2, M4. Easy peasy lemon squeezy. Yeah. And by the way, like I got to go in 5 minutes, and I'm not around for a while because I'm wrapping up this Harvard stuff. If you want to learn about technical analysis, if you want to learn about fundamental analysis, go to FX Bootcamp. I believe there's still a coupon going on there. I can't remember, but they're visit fxbootcamp.com. I think there's still a summer special there. Couldn't even tell you, to be honest. The other thing too, if you go to tradersway.com and open up a live account, when I get back, we are going to put together, I think, a week-long day trading workshop. So I'll spend 5 days in a row and over that course of the week, I will teach you in great detail how to day trade. So that might be something that you want to do now as well, because that'll probably be 2 or 3 weeks from now. So in that 2 or 3 weeks, you can go through the compliance process and all that kind of stuff and open the account. How much you fund, I don't think really matters. Just put 50 bucks in, but just show us that that we've earned your loyalty and respect, and then I will provide all that training to you for free. So there's lots of things that you can do over the next couple of weeks to really sharpen your saw. And this is the time of year that you should be doing it. When there's low volume and low volatility in the marketplace, you should really be investing your time and your money into education. Because very soon, between, let's say, September and March, is the heavy trading season. Heavy trading, just like crazy trading, and you're not gonna have time for sleep, yet alone learning how to swing trade, for example. You should have all of that taken care of as soon as possible. That's what you should be doing now: learning your fundamental analysis, learning your technical analysis, learning swing trading, scalp trading, all that kind of stuff. That's what you should be doing over your summer. No, there is not exact dates yet, Jerry, just because of my summer at Harvard makes things a little more difficult. But we'll do it soon. As soon as we can. probably the end of July, maybe the beginning of August. So maybe it's right after non-farm payrolls in August, for example. That might be fine, but for the people in non-farm payrolls in August, if they're like, oh yeah, I totally want to join that, and then I open a live account, well, sometimes a live account might take a week to open just because you need to provide the proper documentation for compliance and due diligence and all that. And if that, it might take you longer. I don't know, right? So you might as well do it now, is what I'm saying. Okay. Any other questions? I'm really happy to help. And Marcus thinks bullcrap. I'm giving you bullcrap. I apologize, Marcus. Oh, that's tradersway.com. I am the chief FX market strategist. La 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 la. For some reason, I can't type in the room. Strange. People. No. Is it a good time to swing trade before September? It may not be. That's not to say don't do it. It's to say do your job, set up the trades, look for your proper entries, and you might not get them. Okay? That's all. Hey, Mikey. How do you keep your calm mind before, during, after trading? Well, a good way is to invite hundreds and hundreds and hundreds of people to listen to you speak and then have a microphone problem. That builds patience and calmness. I learned two things recently from a Buddhist monk. He said, he came up to me and he says, "You have it." And I said, "I know, but what is it?" And the second thing, we're talking about how I meditate, and he says, "Oh, that's dangerous." I'm like, "What?" But he was true. He was telling me how my style of meditation on the long run is dangerous. But it's a very interesting conversation. Do we need to set a take profit? I always trade with a stop loss and a limit order, always. And it helps with my, like if I'm scalping, I could do like a 20-20 or a 25-25 OCO. If I'm spot trading, I might do a 25-50 OCO. If I'm swing trading, I might do a 50-150 OCO. Sometimes I'll do even 150-300 OCO, depending on how long I want to sit on it. But yes, I always have a stop for profit and another stop for loss. And by the way, I think somewhere on Bloomberg, there's an interview with me talking about just that thing. I say, I have a stop for profit and I have a stop for loss, right? Yeah, take a Valium. I don't know if that would be good. One funny story on that. I did a live workshop many, many years ago in Los Angeles, and I've probably only done 4 workshops in the 20 years I've been doing this, right? So anyways, and a guy comes up to me who's been trading with me a long time, and he says, you know, I'm going to have to leave early. I said, leave early? You just got here. What's going on? And he's like, I got to go divorce my wife. Like, what? He's like, yeah, I just found out. I've been away on a business trip for a week and a half. And then I came straight here and I opened up my trading account, trading platform to look at the charts before coming to the seminar. And my account was blown up and closed down. And it turned out that his wife, while he was gone, was mad at him and opened up his trading account and threw down a whole bunch of bad trades as like out of spite. And he divorced her. And it had something to do with she was also on some crazy medication. Like, it just got really bad. And I know someone else that was on medication. He had some sort of like dental surgery or something, and he was looped out on his painkillers, and he lost a lot of money trading. So yeah, stay off the drugs, kids. Any other questions? I have yeah, that's you. So anyways, you know, I'm sorry I got to go, but I love you, babe, but I got to jump. Thank you for your patience with me this morning. That was a real challenge. Turns out it was just the stupid software, not you, not me, not FX Street. Really like to thank FX Street for hosting me for more than 12 years. Amat, I already covered that, so maybe watch the recording. But thank you, honestly, guys. I really care about you. I know most of you, in fact, and I know how hard you work. I know how hard it is. It's safe to say that even after 15 or 20 years of doing this, it's still an exciting business, which means it's never truly easy, but it's worth the effort. That much I can absolutely confirm, and it does get better. Your first 5 years are a real challenge, and then there are many times when you look into the abyss and decide whether you should quit. But I hope you have the strength and wherewithal to keep trying, and I hope in some way that I give you that strength, even if it's just a small way. It's worth fighting for. It really is. Is the euro going to be? Oh, we already did that trade. It's already done. We did that in the first 30 seconds of non-farm payrolls. But anyways, so I'll see you in a couple of weeks. Again, if you want to do the training videos and stuff, just visit fxbootcamp.com. Open up a trading account at Traders Way. I will be doing a day trading workshop in a couple of weeks. That'll be free for live account holders at Traders Way. And other than that, peace on earth. May the pips be with you. May your profits be above average. Take care of yourself, you hear?